In the world of cryptocurrencies, it's possible to earn anywhere from $50 to millions of dollars in just one day. Some people manage to make even more. But to achieve this, it's crucial to understand how this market works. In this video, I'm going to explain what Bitcoin is, how blockchain technology operates, how to buy and securely store your crypto, and much more. Without the right knowledge, you could lose money or struggle to cash out your earnings. By the end of this video, you'll be ready to navigate this world with confidence and start making money with cryptocurrencies. Let's begin with the most intriguing question. What is blockchain? If this topic interests you, be sure to like the video, subscribe to the channel, and turn on notifications. Now, let's dive into the content. What is blockchain? Blockchain is the foundation of most cryptocurrencies, including Bitcoin. To simplify it, imagine you and a friend share a notebook where you keep track of all the amounts one owes the other. This notebook is always visible to both of you, and every time someone lends or pays something, it gets recorded there. Before any entry is made, everyone needs to agree that the information is correct. Once an entry is recorded, it can no longer be deleted or altered. Each record in the notebook connects to the previous one, forming a chain of trustworthy information. If someone tries to change an old record, they would have to modify all the subsequent entries, which would be nearly impossible. That's how blockchain works, ensuring the security and transparency of transactions. In the case of cryptocurrencies, blockchain ensures that information about who owns what is secure and verifiable. What is Bitcoin? Now let's understand what Bitcoin is, the most famous and first ever cryptocurrency. Launched in 2009 by a person or group under the pseudonym Satoshi Nakamoto, Bitcoin was designed to be a decentralized digital currency. This means it isn't controlled by governments, central banks, or financial institutions. Instead, Bitcoin operates on a peer-to-peer network based on blockchain technology, which ensures the security and transparency of transactions. The main goal of Bitcoin is to be an alternative to the traditional financial system, allowing people to make payments directly to one another without intermediaries like banks. Additionally, one of Bitcoin's greatest advantages is its limitation. Only 21 million Bitcoins can ever be created, making it a scarce asset, which increases its value over time. How does Bitcoin work in practice? But how does Bitcoin actually work? When you send or receive Bitcoin, your transaction is recorded on the blockchain network, which acts like a public digital ledger. All computers connected to the network verify these transactions, ensuring there's no fraud or duplication. This verification process is done by a network of miners who use computing power to solve complex mathematical problems. In exchange for their work, they receive new Bitcoin units as a reward, a process known as Bitcoin mining. A key feature of Bitcoin is its decentralization. Unlike traditional currencies, which are controlled by banks, Bitcoin is maintained by a network of computers around the world. This means no one can simply issue more Bitcoins or artificially control its value, as happens with traditional currencies. Bitcoin as a store of value. In addition to being a digital currency, Bitcoin is considered by many investors as a store of value. This means it can be compared to assets like gold, serving as a way to protect wealth from inflation. In the United States, where inflation can sometimes erode the purchasing power of the dollar, Bitcoin has become an attractive option for those looking to preserve their purchasing power. Many people see Bitcoin as a way to diversify their investments and protect their finances in the long term. Is Bitcoin legal in the US? A common question is whether Bitcoin is legal in the United States. The answer is yes. While the US government continues to develop more specific regulations on the use of cryptocurrencies, the IRS already recognizes Bitcoin as a form of property. This means you can buy, sell, and use Bitcoin in the US without any legal issues, as long as you report your transactions for tax purposes. Some companies already accept Bitcoin as a form of payment, and more Americans are adopting cryptocurrency in their daily transactions. How to buy and store cryptocurrencies. Now that you know what Bitcoin and blockchain are, let's talk about how to buy your cryptocurrencies in the US. There are several ways, but the most common is through cryptocurrency exchanges. Platforms like Binance, Coinbase, and others allow you to buy, sell, and trade crypto for US dollars. But security is crucial. Choosing a trustworthy exchange is the first step in protecting your assets. Practical example. In addition to exchanges, there are digital wallets for storing your cryptocurrencies. They can be hot wallets, which are connected to the internet and easy to use, or cold wallets, which are physical devices and more secure since they are offline. Do you already use a digital wallet? Or do you prefer to keep your cryptocurrencies on an exchange? Comment below. How cryptocurrency networks work. Detailed explanation. Cryptocurrency networks are the heart of the entire crypto system. They ensure that transactions are verified, recorded, and maintained securely and transparently. But how do they actually work? Each cryptocurrency operates on a specific network called a blockchain. The blockchain is a digital accounting technology that records all transactions made with a cryptocurrency. Think of it as a large public ledger where all operations are recorded in interconnected data blocks. Each new block is validated by all participants in the network before being added, ensuring the security of the process. It's important to understand that there are several blockchains, each with its own characteristics. The most well-known are the Bitcoin, Ethereum, and Solana networks. The Bitcoin network focuses on being a decentralized store of value and means of exchange. Ethereum, however, goes beyond being a currency and enables the creation of smart contracts and decentralized applications, dApps. Solana, on the other hand, is known for its speed and low transaction costs, making it an alternative for blockchain-based apps and games. Differences between networks: Bitcoin, Ethereum, and Solana. Let's take a closer look at the main networks. Bitcoin is the oldest network, focused primarily on serving as a decentralized currency and store of value. Its main objective is to enable peer-to-peer transactions without intermediaries. The Ethereum network, on the other hand, is more flexible. In addition to being a cryptocurrency, it also allows for the execution of smart contracts, automated agreements that are executed when certain conditions are met without the need for an intermediary. This has opened the door for various decentralized applications, such as NFTs and DeFi, decentralized finance. The Solana network is one of the fastest and most efficient, capable of processing thousands of transactions per second with extremely low fees. This makes it an attractive option for projects requiring high speed, such as blockchain-based games and NFT marketplaces. Investing indirectly in Bitcoin, ETFs on the stock market. Now, you might be wondering, how can I invest in Bitcoin without dealing directly with digital wallets or cryptocurrency exchanges? A very interesting option in the US is to invest in Bitcoin through ETFs, exchange-traded funds, on the stock market. ETFs are funds traded on exchanges that allow investors to buy shares that replicate the price of an asset, such as Bitcoin. In other words, you don't have to buy Bitcoin directly. Instead, you can purchase shares of these funds, which track the value of the cryptocurrency. This makes the process simpler and more accessible, allowing you to invest in Bitcoin using your traditional stockbroker on the stock market, without having to worry about the security of digital wallets or exchanges. In the US, we already have several ETFs that provide indirect exposure to Bitcoin, such as the ProShares Bitcoin Strategy ETF, BITO, and the Grayscale Bitcoin Trust, GBTC. These make access to the cryptocurrency market easier in a regulated and familiar way for those already investing in the stock market. Monitoring prices and trends in the US. To make money with cryptocurrencies, it's essential to monitor prices and major market trends. Platforms like CoinMarketCap, TradingView, and CoinGecko are great tools for tracking crypto values in real time. They provide information on trading volume, market capitalization, and more. In the US, many people use these platforms to make more informed investment decisions. These sites are like the home broker of the crypto world, where you can track everything in detail before making a purchase or sale. What platforms do you use to follow the market? Leave your comments below. Conclusion: now that you have a basic understanding of how Bitcoin, blockchain, and other cryptocurrencies work, you can start your journey to making money in this market. Remember, Knowledge is the key to making good decisions. Thanks for watching. If you enjoyed this video and want to see more inspiring content, don't forget to subscribe to the channel, like and share. Until next time, may your ideas become great achievements.